If you want the real rocket ship, you go into the juniors, and it's really the only area that I see that is going to compete and will compete with returns in crypto over the next year or two. Since my last appearance on Real Vision, Why Gold Miners, Why Now, which was around the last week in May, we saw gold at that time was around 1,700 bucks, ran up to all-time highs, over 2,100. This was the case for all these areas, the gold miners and silver and things of that nature, which was into the first week in August. That was the sort of interim local top. The GDXJ ETF, which is where I focus, versus GDX, because we do look at the junior miners, even though if you're a part of that ETF, you're a fairly big company. It's not even like, a very small junior usually, but that was at 44 bucks, around right there at that time. And I'm thinking back to, I looked at the published date and after that, ran up to 65 into early August. A lot of the individual names one of them that I talked about here and a bunch of other ones, they soared, even the really small ones. So now gold is back at 1,900. Basically split that. GDXJ, the same, 56, which was 44 before, hit 65. And silver was 18 bucks. In late May and early June, hit 30, going into late July. And then now it's back to 26 and a half, 27. So, I think that this is the perfect scenario where you essentially have that first run that went into August. We saw some hot money come in from all over, Momo money, and over the following 5 months, which I didn't think would last that long, during that consolidation in gold, silver, and the miners, they're gone. They puked out. And a lot of that ended up in tax loss selling later on for the smaller juniors, which is an opportunity. But I've been amazed. I was a little bit surprised that it's taken this long of a consolidation with gold to go to the next leg. But the good news is, look at the way it's been trading. It's not gone down hardly at all in terms of percentage terms since it had the first correction. It's just been building a base and flagging ready for the next one. You're seeing the same thing with silver and GDXJ and the miners to a good degree. This is ready to shoot to new highs, I think, in Q1, gold that is, and silver, and the miners. In terms of the miners, it won't necessarily be their recent top in 2011. They're not there yet. For gold, new highs. Silver, it will also be new highs in the sense of what it recently reached, 30 bucks. And there's a lot of runway ahead of us, and the tax loss selling situation that happened. I love this scenario. You've got people that are up everywhere else with the Fed pumping money in like insane amounts of fiat printing and injections. The M1, the numbers that I've seen, and these aren't even headline things. Everything's gone up and nobody could figure out why. Everybody's, the economy's dead. We have such high unemployment. But the fact is that people have a lot of gains. And so they wanted to offset that. And if you were sort of that hot money, or you had an underperformer in the gold and silver section of your portfolio, that gets chucked out. And sometimes the price sensitivity is nada, especially if they got into a smaller junior. So we've been plucking off, all through, starting late October through December, even still now, building positions in those companies. And, we're already seeing them go back up after the first of the year, first couple of days. And that's essentially the perfect scenario. So last time I talked about the function of gold. And in this case, basically looking at March is a great benchmark of that. And also talked about the obvious piece, which is that, this is protection, store of value against debasement of fiat currencies, right? So that's continued and done so on a huge level. And I think that what people can do, you're pricing all of your stock gains in dollars. The US dollar has not been strong. It's been stronger than the other fiats. But when you put this up against the gold price, true money, they've been crushed. And so I think pricing things and looking at it that way, just like a lot of people, and I think in the future people are going to price things in terms of Bitcoin and gold, and you look at it that way instead of dollars or euros. And in March, we had such a crazy flush. I mean, I'm very heavily involved in crypto, but this is a space that I have a bit more in, a lot more experience. But the fact is that gold, during the flush of March, it went from 1690 and hit a low, intraday low of 1450. And it was right back in the 1500s. So you're talking about a 15% drawdown. Bitcoin, which I saw all this stuff going on in the world, and I lightened up some core positions around 8,500 to 9,300, and then I woke up a day or two later from a nap, and it was down 50% on the day, and the market, S&P, NASDAQ, you name it, they were all down much more. So gold's function is really a great place to have assets allocated, even on the defensive side. It's proven that. You saw it in 08, 09. It goes down less, and it's not supposed to go up like Bitcoin. It's supposed to go up like gold. And if you want a little bit of juice to that, it's silver. And if you want additional juice to that, it's mining stocks. And if you want the real rocket ship, you go into the juniors. And it's really the only area that I see that is going to compete and will compete with returns in crypto over the next year or two. It's a wild area, and trust me, things can really move like we're seeing in some of the cryptocurrencies. And really, to summarize, in the fiat world, this just isn't going away. The macro environment, low rates, the monetary side we always see. The fiscal side is going to get wacky. And these are numbers you have to dig for. That's the US, but it's global. It's global. And how are they going to stop? How are they going to slow down or not continue to print more fiat? I mean, it's like impossible at this point with their debt, with how bad, businesses are struggling, unemployment levels. I mean, the economy's not coming back with COVID. You can say the stock market has and think everything's hunky-dory. If you're rich, it's going to stay very aggressive, and there are going to be points where it's going to get pretty nasty for the fiats in certain cases, all of which gold is essentially the opposite. It's a mirror opposite of the fiat. Could be euros, could be rubles, could be dollars. Tax loss selling, it doesn't really matter. I look at all sectors. There's always a sector that's been, bludgeoned. This year, plucked up some oil names, which were just hatcheted versus the overall market. What you really want is the ideal situation is that people have gains in other areas, broad areas, big gains, whatever, and that they're going to have to sell some losers, which really it expands the amount of selling in names that were already weak. Junior miners and gold miners, this is not always the case, because in a bull market, like if things were rolling with gold and silver in Q4, and if they weren't consolidating, then we wouldn't have had these bargains. But I've made a separate career out of essentially buying companies in Q4. Definitely most of them are in the junior mining space, because those have the biggest ability to be really messed up in terms of their price discovery temporarily. Meaning, if I'm buying a house and I need to raise cash, and I have a ton of this, $15-20 million market cap stock, and it's not trading, I could cut that thing in half because I have to sell it in a few days, and it'll go back up. It'll go back up even before the end of the year, but you've already had pressure on some of these from the hot money that came in the summer, which they did. That coupled with big gains everywhere, in the stock market, etc. And you basically had this period of time that everybody with momentum is gone. It's based. What I care about as a driver of the stocks is the price of gold and silver. If they're good, the others are taken care of. So I've accumulated a number of names, and the next show I will talk about more individual companies. But I think that we've seen it every year to a degree. It could be just individual companies, not necessarily the whole sector. But recently, with this bear market in juniors, it has happened very frequently, which is you see these losses taken towards the end of the year. The buyers don't show up. They're illiquid. They go down a lot. Gold miners, silver, and you look at their charts from what they were at in like October, November, December, and then look in February. I mean, they've ripped. We have made huge returns. And this year, I've been telling, my people that this is perfect. I mean, so, that included some of the oil plays or other plays because losses needed to be found. And sure enough, first day of the year, second day of the year here this week, they started going. I mean, we're down today fairly decently in gold, back to 1900, down a couple percent, which is great if you don't own enough. So they're pausing. But I think that, by the end of January, I always say February 15th at latest, a lot of these names will be higher. And if they're smaller and they're good, they could double in a month. When you talk about Bitcoin and gold, it's a really close to my heart subject because I'm known, for the last 10 years, editor of the Gold Investment Letter. So people assume I'm Peter Schiff, which I'm not. It is really Peter Schiff's stance. Highly respect him, but on Bitcoin, he's been very stubborn and he's got egg all over his face, and that's been the case for a lot of the older school thinkers in gold. They don't get it. They don't understand it. And I've been buying crypto. My first purchase and alert to the newsletter was in May of 2016 under 500. Traded out of that early. It was funny money. When we went back down after the bubble popped into the 7,000s, I've been studying this area diligently for 2.5 years. And started to average in and started to look at other coins. My background is actually also as a VC, venture capitalist in tech, fintech, these areas. So, I've done investments alongside of the biggest names in Silicon Valley, Sequoia, Benchmark, Andreessen, Kleiner Perkins, and later stage stuff. I know, what's good. I know who's good. And just in terms of having deals, we've gone through that a lot from a couple of firms that I was with. So it's really this great balance of career. Also having gone through the internet bubble is huge. Having that experience and getting wiped out after making my first money ever as a young broker, knowing how that can go. Also my age, I'm mid 40s, and that's sort of the perfect spot, I think, where I still get all the capital markets, old school guys, and then I also have the millennial, really close attachment, and I get them both, and I can mix them, I think, fairly appropriately. But the bottom line is that when you talked about urgency this year, I don't know if I've ever beaten the drum so much. A lot of that was with premium and elite members, and you can talk to them and they will say, some of them were sick of it, but a lot of them did buy, even though they didn't understand much about Bitcoin. And I've talked about it openly for a while. I've also called very close to some of these bottoms that we've seen intermittently, and announced that late 2018 bottom was in. If you're a gold investor, you can't ignore it. I can't not talk about it. It's going to forever be linked with gold. The issue I see is it's very obvious to crypto people and to others about these old gold bugs. I'm not a gold bug. I'm a gold bull. The old school thinking has been an issue for the the gold community because Bitcoin is forever linked to gold, forevermore. And basically it's not going away. It's going to continue to grow the ecosystem. When you start digging under the hood with this entire crypto blockchain, look at DeFi, they are benefiting from the same things. It's just that you're dealing with Bitcoin being much more earlier stage, and I look at it like it's a low float global branded, it's relevant to everyone in the world penny stock. That's obviously going to go up more than something that's been here for 5,000 years, and its function is to just keep the value, and it actually does better. It does better than that. The annual return on gold since 1971, I have to do the new numbers, it was up in the high 8s. It's now going to be well over 10% annualized. That's not bad. The other thing is that on the crypto side, because I'm so deep there as well and have been for quite a while, nobody gets gold. And I'm talking about the biggest names, thought leaders, the geniuses, the visionaries. I mean, the people that I highly respect. They're smarter than me, they're richer than me, but they don't get it. The thought leaders that basically call it lame and say Bitcoin's going to eat its market cap of gold. Bitcoin was literally created based on the model of gold. So if you don't like gold, what the heck are you doing in Bitcoin? It's digital, it can move everywhere, great. Don't you know that everything is going to be tokenized and already is? So, there's a lot there to breach, because I believe that the real thing is gold and Bitcoin will eat the lunch and are eating the lunch of fiat. Be on here in 2 weeks, same time, same place. Be sure to subscribe if you like this. Be sure to like the video, get the notifications. It'll be 2 weeks like clockwork. The next episode will be longer, and I'll be able to talk more about individual opportunities and other things. But just to talk briefly about the two companies that I discussed in the May video, International Tower Hill and McEwen Mining. Basically, International Tower Hill tripled in 6 weeks. It doubled very, very quickly, and it's been doing what the sector's doing. Consolidating since August, higher lows than we had before. That was a higher high at 230 US. I've been buying more here. And frankly, because we had a position at 45, 50, 55 cents, when it went to $2, we took our principal out, and I'm putting that back on right now while it's under $1.50. And it's the same story. I mean, there's nothing else different about it. It's just the sector and what it's doing. So that thing skyrocketed. And McEwen doubled in, I think it was 6 or 7 weeks as well, from the 69-cent price when we came on live on that day in May. And I really look forward to getting more into individual opportunities, gold, silver miners, gold miners, and Bitcoin and crypto. I mean, they're all connected. I think when you look at Bitcoin and gold, you can't talk about one without talking about the other. And so I will get into some, I believe, unique thoughts about that I'm not hearing out there, and it'll be fun.